melt with you. Well, half the world stopped because it's Lunar New Year in China, but guess what? Our markets are open today. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Well, let's do just that this morning and check in what's going on Wall Street this morning. On the telephone is Philip Statler from Statler Financial Services in downtown Sebring. Philip, welcome back to town, and we're glad you're here this morning.
Hey, I'm glad to be back where it's a little warmer than Evansville, Indiana, where it was still relatively cold for a Florida boy. Obviously, it had warmed up quite a bit for them, but still a little chilly for us. We got to catch a little bit of upward basketball. My granddaughter's playing and see her make a couple baskets. So that was all exciting and fun. So.
Oh, I'm glad. I didn't get a chance to ask you before we went on the air. Did you still have snow up there?
Only in the driveway, in some of the driveways, parking lots where they had just kind of, kind of slid everything together to kind of clean off the parking lots.
Okay,
but even that was starting to melt pretty good.
40s is a heat wave up there this time of the year, isn't it?
It is. It was. It was getting in the 50s though. Sunday and Monday.
Well, that's kind of nice. We got 80s down here, so I'm sure you're glad to be back here, at least until Monday. We're going to get back down to 39 degrees on Monday morning.
Oh my goodness, I hadn't seen that.
Oh, yeah. Missed yesterday because it was a national holiday and the markets were all closed. But Friday, we had a day on Wall Street. Everything was mostly green except for the NASDAQ, 48 up on the Dow. 3.5 up on the Standard & Poor's. NASDAQ dipped by 50, and probably the indication that the software panic continues. The Russell 2000, where they aren't as influenced by techs, it actually gained 1.2% on Friday. So we're back to that usual cycle, and I was ranting yesterday while I was soloing about how my tip sheet's being written by a bunch of Gen Zs that don't even remember the '09 crash, let alone the ones that have really hit hard. It's kind of interesting. They're viewing this as being a major crisis. I think I'm tempted to just call it a category shift, wouldn't you?
Yeah, Dave, obviously when we see a correction, we're used to seeing across the board, 10, 15%. Where a bear market is going to be a 20% across the board. And I guess because we're not seeing it across the board and maybe it's just affecting a lot of their stocks that are in software, they're feeling it and just realize that, sectors change, right? People will leave one sector and move into another sector. And I think right now that's probably what's happening to software.
Absolutely. I mean, I'm looking at the major indexes, and we're like 1% away from record highs in the Dow. We're a little more than 1% away from the record highs in the S&P. NASDAQ's got a couple 3 points to go in order to get back up into record territory again. But when you talk about a couple of percentage points, we're still solidly in nosebleed territory here. If your portfolio has been tanking, it probably means you're a little heavy onto the software side at the moment, wouldn't you think?
Well, yeah, I mean, I think, and there's big names that are getting hit, right? I mean, Microsoft and
really?
yeah, I mean, it's gotten hit a little bit, at least last week it did, in that shift. So it's a good quality company. We know that they're here for the long haul. They've got a good product, they've got a big market share. So you still get times like that where people start taking profits because of what they hear or what they see.
Absolutely. So, once again, sector shift instead of major crash would probably the proper term. Like I said, the small cap stocks actually did pretty well. I think the Russell is within about 10 points of being at an all-time high again. Tidbits out to start the week. We were kind of giggling and assuming the deal was already done. Warner Brothers was going to sell out to Netflix, and it was already a done deal. Paramount has been contorting and screaming and stomping their feet and holding their breath until their face turns blue, and Now they loosened up the purse strings, increased the offer enough to the point where Warner Brothers board of directors said, "Oh, let's take a look at this." That story isn't over yet. We still don't know who's going to own the big movie company, do we?
Yeah, and I find it interesting that Netflix actually granted Warner Brothers a 7-day waiver to reopen the deal talks with Paramount. I'm not sure exactly why they would have done that, but unless they're starting to think maybe they don't want it, I don't know. But that kind of caught me by surprise.
Yeah, the bidding war might very well be getting to the point where Netflix is saying, wait a minute, can we make any money off of this thing if we have to raise the price too much?" So it's getting kind of interesting all of a sudden. Stuff we assumed was a fait accompli is all of a sudden an open issue again. And I had to make note of something that crossed over my tip sheet this morning. With all the travails that gold has been through over the last few weeks, increases in margin calls tanked it. Now we got a downward pressure on it this week because the Chinese markets are all closed for Lunar New Year. Tip sheet pops up and says, "Don't dump your precious metals yet. Get ready for the $10,000 super cycle on gold." I'm not sure I'm going to change my retirement plans for that, but I found it an interesting outlook, didn't you?
Yeah, that's how long did it take it to get to where it is now? A long, long time. So yeah.
Kind of went through my mind with the same thought down the line. Market got a little bit of euphoria on Friday off of a really nice consumer price index report. Ended up showing with our inflation much less than they expected, and ended up with some fairly good feelings. Well, it didn't take long before the friends at Deutsche Bank decided to dig a little bit deeper, and they said in the CPI numbers that came out on Friday, the categories that surprised to the upside were those that are not in the core numbers, the stuff that they expect to go up and down and control inflation. Well, they say those are the numbers that are going up and holding inflation up there, and that's not good news for any chances of the Federal Reserve giving us more than that planned one more rate cut this year at most.
Yeah, I mean, and we can see that, right? I mean, going to the store and we just can feel it that inflation is really not under control. And I'm not sure what it's going to take to get it there, Dave. It just seems to be one of those things that we cannot get whipped.
And what's weird about this inflation cycle, and your observation's spot on, the things that you expect to go up and down markedly, they just continue to rise, not at a rapid pace, but they ain't going down either. I mean, things like food and energy, yeah, gas goes up and down with the price of oil, but, it's still nowhere near down to where it was, and that's one of those categories that's supposed to float up and down. Food price is the same. Like you say, you go to the grocery store, and you're still paying more, and really, during a time that inflation's reducing, it's supposed to not pay more by then.
Exactly. So we'll see what they can do. I'm not sure what else is left in the the Fed's quiver, what they got left that they can shoot at. But the only thing is to go the opposite direction they've been going, which is to raise interest rates. And we don't really want to see that either.
Thanks, no thanks. I don't really want to see them drop precipitously because I don't like what it does for inflation, but raising them doesn't help a bit anyway. It is kind of like Monday, which means if you can't tell from our ruminating together, it's a fairly slow news day to start the week off, but the reporting season continues, and I've got a listing for this week 10 miles long on companies that are supposed to be doing their quarterly reports. What caught your eye this morning so far?
I think Norwegian Cruise Lines kind of caught me this morning looking at their report. It seems to me like they've got, they've been lagging behind Royal Caribbean and Carnival. And it's not really earnings for them right now. It's the fact that it looks like the Elliott Investment Management firm has accumulated a pretty large stake in Norwegian, and that's anything over 10%. And it seems like they've gotten a little more than 10% stake right now in Norwegian. And so they're really kind of an activist investor. And so they're looking for changes to really turn that company around. And so that's got Norwegian trading up, almost 6.8% this morning. So some good news there for them.
They're not going to put oar holes in the side of the ship and make people row or anything, are they?
No, I don't think so. I think that would be the opposite of moving in the right direction, Dave.
Okay, just checking. The cruise industry has been kind of interesting. Even when things have been getting tight, we've been getting pretty good reports out of the cruise business. I mean, it's the ultimate in elective expenditures, but the cruise lines have not been doing that terribly badly for the last year.
No, they're not. And I will tell you that there has not been a lot of pricing pressure either. I mean, they've been able to hold on, but pricing, and then of course, then you get all the extras you got to pay for, especially dining and drink packages and this and that. And so, I think they're the ones that are doing it right, which seems to be Royal and Carnival, are hitting the mark for sure. Um,
Understood.
so
What
let's
else
talk
you got this
about
morning?
a company called Vulcan Materials, and it may not be a household name, but it's a name that I've heard of before when it comes to construction, aggregate, and that kind of stuff. They had a disappointing results for this last quarter, which which has them trading down this morning, getting close to 7%, 6.9% this morning. LabCorp reported they released their fourth quarter results better than expected, both on revenue and on earnings. So good news for them. They're trading up about 0.8%. I'd seen somebody else that had reported. Who was it? Maybe it, Dave.
All right. Well, we'll reset the table then. Modest up day for the blue chips on Wall Street. The high tech ones did not have a great day, but it wasn't a disaster on Friday. I saw some increases in the futures yesterday morning while the futures markets were open. Doesn't look like we held up 45 minutes before we open. What are we looking at?
No, we're really not, Dave. As a matter of fact, the futures are actually starting to build back. They were pretty solid red, but they are getting to the point that they are reducing those red marks. At least in the Dow, it's actually slightly green right now. If I talk fast enough, it bounces between red and green. $4 here, $4 up, $4 down. So you can see who knows what it's going to open at. The S&P 500 looks like it is down about 0.1%. The Nasdaq 100 right now is a big loser, down almost 0.5% this morning. On the other side of the coin, we've got silver down almost 4.5%, back below $75 at $74.47 an ounce. Gold down almost 2.3% this morning, well under 5,000. And crude oil heading the right direction, Dave, down about 0.33% to $62.55 a barrel right now.
And we'll take that improvement as it goes. Yeah, the gold market, they were saying on one of my tip sheets, being affected by the fact that the Chinese markets are closed for the Lunar New Year. They take an entire week off in China. So the Asian rim is kind of floating on its own. For the most part, it was in green ink everywhere except China, where they didn't trade anything. European markets are generally kind of mixed. I mean, I'm trading the average index one side or the other by about 0.1%, either side of the flat line, halfway through their trading day. It's going to be kind of a weird week on the overseas markets, like I said, because the 500-pound gorilla overseas is China, and both of their markets are closed all darned week this week and closed on a decidedly red note on Friday. So it's going to be interesting watching the overseas markets. Trying to keep track of ours and trying to keep track of our retirement, well, that's your job to help me with that. How do I find you to get the risk out of my plans, Philip?
Dave, I'd love to spend 30 minutes on the phone with folks just to make sure that they are heading in the right direction for that retirement they always dreamed of. To do that, it's simple. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back again tomorrow morning here, same time on Light. You have a pleasant day, my friend, and welcome back.
All right, take care.
Take care. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today as the week gets started. Hope it goes well for you. Join us again tomorrow as we keep you updated on what's happening on Wall Street. Bye now.